Hi, this is Reggie Jackson, the creator of AllKnownBusinessCosts.com. I wanted to present this video to demonstrate the difference between accounting and the all-known business costs, business costing and management process. Now, the first thing is to look at the accounting side, and we see that basic accounting takes revenues minus expenses for profit or loss. And although this is a necessary part of any business to have your accounting done, it is not the best method for the individual business owners and or managers. Accounting by definition provides a after the fact look of the results of your business operations, meaning 15 to 30 days or longer after the end of the period. Your accounting gives you a measurement of how you did. With anything that you're managing, it needs to be managed as close to real time as possible, which gives you the control and the power to make changes to make sure that your business is operating profitably. The all-known business cost model was created with common sense and easy math. So let's take a further look. How do we measure the success of a business? The success of a business is not the quality of the product or service that you're creating or providing. The measurement of the success of the business is the business profitable? So to help understand that and to greatly simplify this process, what I want to do here is discuss each of the line items here so it's a better understanding of what's going on. The first part is your revenues. Revenues are merely the charges that you have for providing your product or service. This is just a total that you're able to charge your customers. All known business costs represents all of the known business costs that you know with 100% certainty that it's taking you to provide that product or service. What makes the all known business cost process different is that you will see how your cost structure is made up and how the vast majority of your costs are very predictable and known and does not change, so that you're able to do a measurement with great certainty. So the all-known business cost is not a measurement of your accounting expenses, but all of your known costs. So it gives you a much better measurement tool. The third line, minimum profit or loss. The minimum profit I'll discuss in another video in a little more detail, but basically this is a calculated amount that allows you to know at what point you can operate your business and on what margins so that you're meeting a minimum threshold of profitability. This is not a difficult calculation, and this is by no means a standard that you want to set for your business. It just lets you know that at a minimum, if you're getting below this number, you are having some issues that you're needing to address so that you are conducting your business to be profitable long term. Loss is just that. It's a loss, meaning that your revenues are not covering your costs, i.e., you're spending money to provide your product or service. The next line is unknown or unexpected business costs. This is Murphy's Law. Something will go wrong. And basically, this goes back to the minimum profit. You need to have a level of profits in your normal day-to-day of your business to absorb these unknown or unexpected business costs. So this is the measurement in which you note that, well, whatever my minimum profit is or maximum profit, there's some business cost that I'm not aware of or that you're not expecting that will occur, and that profit must be able to absorb that. And then finally, once you're done with that, you will end up with your overall business profit or loss. Now, let's look more closely and compare the expenses, which is for your accounting, to your all-known business costs. Now, your all-known business costs consist of keeping and tracking your costs by categories. This is the way that makes it very easy for you to understand. So we see that we have category 1, employee pay and benefits, category 2, motor vehicle, category 3, other equipment, category 4, insurance, category 5, fuel, category 6, wear and tear, category 7, other equipment and employee expenses, and category 8, overhead. So when you see your expenses to the left, and this is your typical accounting where you have a chart of accounts and you have just a list of expenses, the first process that all known business costs does is to simplify by tracking your cost in 8 easy to understand categories. More importantly, with these categories and with the process that is used, 95 to 98% of your all known business costs can be calculated before the first day of the month. So it removes any questions and it provides a line-by-line detail so that you're able to trust but verify every cost item of your business. Now, the other part to understand is that with all businesses, there's a primary structure of having the part of your business that generates your revenue from your overhead. So with the categories that you see here, categories 1 through 7 are the costs that are directly associated with the revenue source of your business. This allows you to specifically calculate what it's costing you directly to provide that product or service. Category 8 is strictly your overhead. These are other costs of your business, but does not have a direct relationship with actual providing the product or the service. Also, this process works in that for every business or many businesses, you may have more than one revenue source. So in this example, we have 5 revenue sources. It can all be the same, doing the same thing. It's just that you have, for example, 5 delivery trucks. You have 5 consultants. You have 5 measures, 5 pieces of machinery that creates the product that you're selling. That you can track each one of these independently so that instead of managing a group, you now can separate and manage each one of your revenue producing sources individually, which only helps maximize your rate of return. This is just another quick illustration to show that categories 1 through 7 deals with the cost of the revenue source and category 8 with overhead.